Hey friends, welcome back to the channel. I'm Iggy, and I've been covering everything from stocks and finance to retirement planning and all things related to growing your wealth. The Investing Iguana is proud to be ranked 8th in the 2024 Influential Tigers by Tiger Brokers with over 950,000 reads and 57,000 likes. I've produced more than 800 videos, racking up over 380,000 watch hours as of May 2025. If you're new here, I also keep a close eye on regional and global economic trends to help you make smarter investment decisions. Today, we're diving deep into the latest analyst report on Geoenergy Resources, a Singapore-listed coal miner that's been making headlines for its strong first quarter results and ambitious infrastructure project in Indonesia. If you're wondering whether this is just another commodity play or if there's something more under the surface, stick around. We'll break down the numbers, the strategy, and what it could mean for your portfolio, especially if you're investing through CPF or SRS. Let's start with Geoenergy's recent performance. The company reported a net profit of $14.4 million for the first quarter of 2025, marking a 63% jump compared to the same period last year. What's driving this growth? It's a combination of factors. First, coal sales volume more than doubled, reaching 3.2 million tons. That's a huge leap, especially when you consider that global coal demand has remained surprisingly resilient, even as many countries talk about moving away from fossil fuels. The International Energy Agency's latest outlook shows that while Europe and North America are cutting back on coal, demand in Asia, especially in China, India, and Southeast Asia, remains strong. Indonesia, where Geoenergy operates, is the world's largest exporter of thermal coal, accounting for nearly half of global exports. But it's not just about selling more coal. Geoenergy has also managed to lower its production costs, thanks in part to favorable weather and improved operational efficiency. Lower costs mean higher margins, and that's reflected in their bottom line. The company's all-in cash cost is now around $11.60 per ton, which is among the lowest in the region. This gives them a significant buffer against price swings and positions them well against competitors. Now, let's talk about the real game changer, Geoenergy's infrastructure project in South Sumatra. The company is building a 92-kilometer private hauling road and a new jetty, scheduled for completion by mid-2026. Why does this matter? Right now, coal miners in the region rely on public roads and congested river routes, which are slow and expensive. With their own dedicated road and jetty, Geoenergy can move coal more efficiently and at a lower cost. But here's the kicker. They're not just building this for themselves. The plan is to open up the road to other miners and charge toll fees, creating a new stream of recurring revenue that's not tied to coal prices. Analysts at Phillip Capital have reaffirmed their buy rating on Geoenergy with a target price of 47 Singapore cents. That's about 46% higher than where the stock is trading today. Their bullish outlook is based not just on the company's strong earnings, but also on the potential of this infrastructure project to transform Geoenergy into a logistics and transportation player, not just a coal miner. If the company can secure agreements with other miners to use the road, Phillip Capital estimates that toll revenue alone could reach $200 million a year once the project is fully operational. That's a big deal, especially when you consider that this income would be much less volatile than coal sales. But what about risks? No investment is without them. First, there's execution risk. Building a major infrastructure project in Indonesia isn't easy. Land acquisition, regulatory approvals, and construction delays are all possible hurdles. However, as of May 2025, Geoenergy reports that about 65% of the land needed for the road has been cleared, and construction is progressing on schedule. The company is funding the project entirely with equity, which means they're not taking on new debt, a smart move given the tightening credit environment for coal projects. Another risk is coal price volatility. While prices have come down from the highs of 2022 and 2023, they remain above historical averages. The latest SGX futures suggest prices will average around $48 to $49 per ton through 2026. Geoenergy's low-cost base gives them some protection, but a sharp drop in prices could still hurt profits. There's also the environmental, social, and governance, or ESG, overhang. Many institutional investors in Europe and the US are moving away from coal, which could limit Geoenergy's access to capital and put downward pressure on the stock. However, the company's main customers are Asian utilities, which are still heavily reliant on coal for baseload power. Let's zoom out for a moment and look at the bigger picture. Southeast Asia is in the middle of an energy transition, but it's not moving at the same pace as Europe or North America. Singapore, for example, is investing heavily in renewable energy and even exploring nuclear power, but the reality is that demand for electricity is surging, driven by the growth of data centers, manufacturing, and urbanization. Coal remains the cheapest and most reliable source of baseload power in the region, and that's unlikely to change overnight. Geoenergy's high-quality thermal coal, with a calorific value of 4,200 to 4,600 kilocalories per kilogram, is exactly what regional utilities need to keep the lights on. For Singaporean investors, there are a few things to consider. First, Geoenergy pays a dividend, with a current yield of about 4.8%. That's attractive in a low-interest rate environment, especially if you're looking to build a portfolio of income-generating stocks. If you're investing through the Supplementary Retirement Scheme, or SRS, you can benefit from tax deferral on your investment returns. That means more of your money stays invested and working for you over time. CPF members looking for higher returns outside the traditional CPF investment scheme might also find Geoenergy an interesting option, though it's important to remember that commodity stocks can be volatile. So, do I agree with Phillip Capital's bullish call? Overall, yes, but with some caveats. The upside is compelling, especially if the infrastructure project delivers on its promise. Even if toll revenue comes in at half of what analysts expect, it could still add significant value to the company. The key thing to watch over the next year is whether Geoenergy can secure binding agreements with third-party miners to use the road. If they can, this could be a multi-year growth story with recurring revenue and strong cash flow. At the same time, investors need to be realistic about the risks. Coal is a cyclical business, and prices can swing sharply based on global supply and demand. There's also the risk that governments in the region could accelerate this shift away from coal, though this seems unlikely in the short term given current infrastructure and energy needs. Finally, execution risk on the infrastructure project is real, but so far, management has delivered on their milestones. If you're finding this analysis valuable, imagine the level of detail you'll get with our daily premium content. For just $1 a month, you can become a member and unlock exclusive insights, portfolio strategies, and real-time updates on opportunities like Geoenergy's infrastructure rollout. Don't miss this chance to upgrade your investing toolkit. The link to join is in the description below. To sum up, Geoenergy is more than just a coal stock. It's an emerging logistics and infrastructure play with the potential to deliver steady, recurring income alongside traditional mining profits. With a strong balance sheet, low production costs, and a clear path to growth, the company is well positioned to benefit from Southeast Asia's ongoing energy needs. As always, diversify your portfolio and never put more than 5% of your capital into a single stock. Keep an eye on key milestones, especially progress on the infrastructure project and new toll agreements, as these will be the main drivers of future upside. Thanks for watching, and if you haven't already, don't forget to like, subscribe, and hit the bell for more deep dives on Singapore stocks and global market trends. If you want to go even deeper, check out our premium membership for exclusive content and daily updates. See you in the next video.